for. They'll find it on GitHub. You can download that model. You can plug in all your own assumptions, and you can check what we thought. But my forecast is Bitcoin, in essence, it's growing 60% a year for quite a while now, and I'm forecasting it will decelerate to 20% a year over 21 years. But that means on average, it grows about 29% a year, ARR. And that 29% a year for 21 years gets you to 13 million a coin. And so what do I expect to happen? Well, I expect lots of high net worth individuals that previously thought it's too risky or it's too scary. They see it legitimized by BlackRock. Now, BlackRock is giving guidance that you could have 2% of your portfolio in Bitcoin. And they're seeing the ETFs like IBIT. And they're noticing that these are the most successful ETFs in the history of the world. And BlackRock has got the most successful ETF ever launched. And now they're seeing the world's largest money manager, BlackRock, with more than 11 trillion. And in different forms, the dollar is getting stronger, not weaker. But there's another aspect of money. It's store of value. If I had a liquid fungible asset that was a store of value that I could give to my children's children, well, nobody thinks that's the dollar, and nobody in the U.S. thinks it's the dollar. Rich people in the U.S. don't have 50% of their assets invested in dollar bills. And what they do think it is in the modern world is they think it's the S&P index, like the Vanguard 500 or SPY or some index fund. Or maybe they think it's real estate, and real estate's a store of value, but it's not liquid and fungible. So it's a little bit different. It's difficult to swap it out in units of $1 million every day. And so it's not quite money, but it is capital in that regard. And gold for 5,000 years was kind of capital. It was years. America won every war, right? We were the winner of World War I. We got richer. We were the winner of World War II. We never lost a war. We were the winners of the century. Our currency lost 99.9% of its economic power over the 100 years. But if you went to Nigeria or like Germany, the currency crashed like 2 or 3 times, right? In Japan, the currency crashed, In Russia, it crashed last time the Russian currency crashed in 98. The Brazilian currency crashed completely 25 years ago. The Argentine currency crashed about 4 times in 100 years. So if you're an Argentinian and you're 30 years old, you already know what it's like to have hyperinflation because you lived the entire cycle. It's just Americans don't. And so if you're taking advice from an American business person like Warren Buffett or Charlie Munger, well, I mean, they didn't live through the Weimar Republic. You can measure it back a decade and you see it's going up 60% a year. And it's 60 volatility. It's a 60 vol against the dollar. So you should think of Bitcoin as an asset. It's like you're on a speeding train going 60 miles an hour, and you've got a flywheel spinning 60 RPM. And the pedestrian on flat land is standing on the plane watching the train go by, thinking this is scary. It's going to suck the oxygen out of my lungs. And they're thinking my money isn't an asset because it goes up 0% a year. So they have a different view toward money than the view of someone on the Bitcoin train. The person with $1 million of cash is going to have $1 million of cash in a decade. A person with $1 million of Bitcoin is going to double their capital every 18 months. If they just hold on to it, right? And so they're going to double it once, twice, 3. A lot cleaner than burning, gasoline. So I'm an engineer, and you're seeing performance thinking it's random, and that's why it's going to stop. And you're seeing volatility, and you're thinking it's random, and maybe it'll stop. And here with Bitcoin, the reason Bitcoin's performing is A, it's volatile, but B, it's a more energy efficient state. The water is flowing down 5,000 feet because it's a lower energy state 1,000 feet below the mountain. You know, it's a low energy state. You've got potential energy in the water and it wants to go to ground, and that's just physics. The 500 trillion gallons of water is $500 trillion. And the $500 trillion of assets are sitting in real estate and currency and sovereign bonds and corporate bonds and artwork and equity. And they're invested in the stock of a company. Falls down, the company fails, right, et cetera. I think I would liken it to, well, I mean, all the water's in the lake and all I got to do is carve a channel and the water's going to flow downhill. And why? Because that's just the law of physics. If I took all your money, like, I don't know, how much of your money do you have stored in a bank in Africa right now, Tom? What percentage of your wealth? What if I took it? Zero. What if I took it all? What if I'm Dr. Evil and I took all your wealth and I moved it into a random bank in Africa? And then I said, hey, April Fool's, Tom, I moved your money here, but here's the key. You can leave it there or you can move it back to the US. Would you leave it there or might you move it back?
I would be moving it back.
Yeah. But so would I have to force you to move it back? I mean, we're thinking that whatever it'll do, unless it gets cut in half immediately and goes south from there, even if it does get cut in half, we still made money, right? So this is indicative of your point, which is when there's enough performance and enough volatility, you don't just attract the smart money. You can attract the Bitcoin maxis, the people that have spent 1,000 hours and their view is, hey, MicroStrategy's 2x Bitcoin, I'll buy it. Well, you might also attract the investors that say, hey, I don't know what it is, but it's up 120% a year for the past 4 years, so I might as well buy the hot thing. But you may attract the volatility traders. And they're like, well, I don't know what it is, but I trade volatility and I need volatility. You can't trade dollar bills today for dollar bills in the future and make money. All partners and investors that they would only trade public company equity, options, fixed income, convertible bonds. So that's what they do. That's what they need in order to function. And what we do is we convert crypto capital, crude crypto capital, we convert it into refined traditional securities. And in the process, we strip away some of the volatility, we strip away some of the risk, we strip away some of the performance. And that stuff that we strip away, that they want stripped away, becomes leverage for our common stock, and we give it to the company and the common stock shareholders. That's how we outperform Bitcoin. And that's why we're more volatile than Bitcoin, because we took the volatility away from the fixed income investors that didn't want it. If I were to go borrow $1 billion and just pay 6% interest on a junk bond, well, then you're just getting $1 billion of Bitcoin, and if Bitcoin goes up less than 6% a year, that was not a good risk. I would lose money on that. But if Bitcoin's going up 60% a year, I'm going to scrape a 54% yield and I'm going to make, $540 million a year for my shareholders by taking that swap. So I just gave you
really fast.
things.
I want to anchor this down for people. So, when I think about what the stock market is and why the rich get richer and the poor get poorer, a substantive part of this is that this is an extremely complicated game that as many times as I've researched you and followed this, I'm just now beginning to put all the pieces together of how this all actually works. But there is this incredible opportunity that, like you said, if you've got somebody that really understands the economics and the physics of it all, there's an opportunity that's staring everybody in the face. You guys have built in a layer that the analogy that you use of turning crude crypto money into.
Right. People dismiss. Remember World War I, and we had horses and cavalry, and like, oh, that doesn't work. And then people dismissed the Air Force. They court-martialed Billy Mitchell, I guess. Air power, that'll never mean anything. And then people stop dropping bombs on your head, and you become a believer in air power. And so I think the real phrase from Max Planck, and he said it in the history of science and the study of science, he said, science advances one funeral at a time. It's like the old guard doesn't have a need to know. They're going to reject it. The younger generation, they do have a need to know. And then people that are under duress, that are fighting for their life, they, maybe you'll start the war, not believing in airplanes and believing that we should fight with a powerful computer, which we will call a quantum computer, which actually does something useful. And the useful thing is it cracks cryptography. Then I would acknowledge it's a problem for the human race. It's a problem for every government, every company, every individual. Because if I really can crack cryptography, that means everything that's digital in your life is now at risk. That means I can launch, nuclear weapons. That means I can take over the government. That means I can have the Interpol kick your door in and shoot you with a fake arrest warrant, right? So the point really is all of civilization breaks down into chaos if Dr. Evil gets the hypothetical quantum computer that really does work. Let's imagine that threat.